Good morning and welcome to the Lightcast studio for this live JOLTS analysis. MZ Burning Glass is now Lightcast. This U.S. Department of Labor report, which stands for Job Orders Labor Turnover Survey, gives us a view into the health of our labor economy. On this August 2nd, 2022, I'm your host, Christopher Laney, and I am joined by two of our top economists, Bloody Teska and Layla O'Kane. Layla, Bloody, welcome to the studio.
Thanks, Chris. Good morning.
Good morning, Chris.
Good morning to both of you. I'm excited to have this conversation with you. The report just came out about 30 minutes ago, and you know, a lot of indications in this report. I want to start with you, Layla. Most predictions had us around 11 million possible job openings, but we saw a little less. What does this mean? What's happening right now?
Yeah, so we did come down to around 10.7 million for openings from our high of, I think, around 11 point, not a high overall, but a high level of 11.3 last month. And it is a little bit lower perhaps than some people were predicting. I know we saw predictions of around 11.1, but just a reminder that it's still very high. Openings are still very high overall. They're up relative to June of last year. And so coming down maybe more than some people thought, not at all at a low level.
Bloody, the other indicator that we look at in this specific report is quick rates, another indicator that kind of shows us what's happening in the labor economy. Did we see any changes there? And if not, or if so, what does that mean?
No, quit rates were pretty stable this month, which means that, again, the confidence level of a lot of the employees is pretty high. We did see layoffs actually decreasing, which is sort of the opposite messaging that we hear in the media. And more importantly, so we saw layoffs in the professional services where essentially the tech industry is hidden because JOLTS hides that industry well, and that actually decreased as well. And so essentially we're seeing a healthy economy. We're seeing the confidence being pretty high, and the decrease that we are seeing in openings is normal, and it's actually welcomed at this point because, again, the Fed is trying to cool the economy.
So you had, Bloody, I'll stay with you for just a second. So again, in this report, 6.4 million hires, which is pretty much on pace of what we've done month over month. Companies still need people. And so this discussion around a recession on the horizon, you mentioned last month that the labor market hasn't got the memo about the recession yet. Do you still believe that's the case?
I mean, I absolutely believe that is definitely the case. There is no indication also at this moment of a recession in the more traditional way. And actually, there was even a statement by the Fed chair, Powell, essentially saying exactly the same thing, that the labor market is showing no indication of a recession. But I mean, I think it goes even, one step above that. I mean, why are we worried about a recession, right? And we're worried about a recession because we think that a lot of people's lives will be affected. And that is one of the main things. And we're not seeing that. Like, unemployment rate is very low. People are still quitting their jobs because they believe they can find better jobs. And they are finding better jobs. And so hiring rate is also stable. So we are not, again, the main reason we're afraid of recession is not there. So even if, technically, you could say that we are in a recession or not, in an essence, we are not, because we're not seeing that suffering.
So this next question is for you, Layla, but Bloody, feel free to jump in if you have some thoughts on this. So we're talking about layoffs. And, again, one of the big indications here is the fact that people are looking at layoffs being part of that slowing economy. There were two industries that did see an uptick in layoffs, specifically in construction and retail trade. Layla, I'll start with you. What do you think that means? And then, Bloody, if you have anything you want to add to it, please do so.
Yeah, so we did see an uptick in layoffs in construction. Not a huge uptick. It's sort of pretty comparable to what it was in April of 2022. So it's kind of just fluctuating a little bit. But in retail trade, we actually saw a decrease in layoffs and discharges. And it's been kind of interesting because we saw a decrease in trade in general in openings and also a decrease in layoffs. And so people aren't really using layoffs. They're just kind of removing those openings that haven't been filled, it seems like, in trade. So, those two things coupled together kind of indicates that we're not seeing layoffs happen as a way for employers to kind of reduce their bottom line right now.
Yeah. Bloody, anything that you would add to that?
I mean, I think, the two sectors that we're going to be watching carefully is trade and tech. And those are sort of like the two sectors that there's a lot of questions around them, and they're proxying about it. it's happening potentially for different reasons. But trade is a little bit of a mystery yet, in the sense that we don't know if it's happening because of supply chain issues, essentially like, hey, there are indications that we're seeing a lot of demand, but actually the supply is not there, or because it is that we're seeing that move, which was sort of expected from trading tradable goods to actually services. Again, all of this, the past couple of 2 years, people had a lot of money. They spent a lot in consumer goods, and the trade sector essentially, sort of went up a lot, and maybe even a bit more than it had to. And so it's still a little bit of a mystery. You see a lot of cyclicality month to month, right? We saw past month trade going up and the previous month trade going down. So it's still a question mark. But there might be some indications there that the trade sector overshot it before, and now it's just adjusting a little bit.
Bloody, you brought up the tech sector, and specifically, yesterday in a Lightcast analysis, job postings and many of the specific tech occupations are actually up in the second quarter versus the first quarter of this year. So I find it fascinating that we are talking a lot about like layoffs and what's happening in the tech sector, yet job postings are still up for things like programmers and cybersecurity and things of that nature. And so, again, just another way of looking at the current labor market, right? And job postings being up in those areas.
And again, job postings are, again, a reflection, and actually they're a leading indicator of the things that we're seeing in JOLTS. Again, remember the JOLTS report is with a month long. We can see in job posts actually what is happening during the month of July. And again, we're not seeing an indication. There is, again, a little bit of a cooling off, but that is expected, and if that didn't happen, it would actually be a problem. So I actually think it's a good thing what we're seeing.
So for both of you, Leila, I'll start with you. Job openings are dropping, right? We saw a pretty decent decrease, but layoffs and separations are relatively unchanged. What does this mean in our economy? And Bloody, you mentioned kind of a cooling off. Is that what what's signaling right now?
I think we're seeing that there are job openings that probably have just been out there for a while, and employers are saying, hey, we're going to maybe give up on this. We're not going to lay people off, but we're just going to maybe give up on finding some of the talent that we might have originally wanted. And I think, as Bloody kind of mentioned, that's overall a good thing. I think it just means that there's not as much intense demand from employers, but it's still really high. So the labor market is still looking really strong, and we're not seeing employers turn to the kind of things that would make us worry about a recession and laying off people that then find themselves unemployed.
Bloody, do you believe that this is the soft landing that the Feds have been looking for or trying to engineer?
I mean, to some level, but again, I think it is important to see the forest and not the tree in this case. Again, I think the bigger problem, or one of the problems, is that, again, the wages are not keeping up with inflation, and that is what the Fed is trying to achieve. The other thing that it's hidden here is the labor force participation, right? There's different reports for millions of people actually not being able to work. So essentially, there are additional problems that this report is not pointing out to. Openings and hirings are all good indicators, but there are sort of these two main other issues that essentially contribute to the overall either problem of the economy, but also what I call suffering of the economy. And so, like, being able to bring these people back and working, and also being able to at least wages keep up with inflation, are sort of like the two main things that we will be focusing as an economy in the next couple of months.
Yeah, that was one of the questions that came up in the live chat on LinkedIn was, do we believe that the job openings is a big issue, or is it labor force participation? And we often talk about that here. And so, Bloody, I appreciate you kind of indicating that we are looking closely at labor force participation, because that is a huge indicator, an issue that we've seen over the last few months. Anything that you would add regarding what maybe you're looking for as we go into the jobs report later this week? Is labor force participation one of those key indicators that you're going to be monitoring when that comes out this week?
It absolutely is. But to be honest, based on what we've seen, again, every report in the past couple of months has been disappointing. So I don't expect to actually see a huge change in this one as well. There hasn't been any significant effect that to make us expect to see something different for this month as well.
All right, closing out, Leila, final takeaways for this report.
Yeah, so I think my final takeaways here are that Yeah, openings came down, but maybe by a little bit more than some people predicted, but they're still really high, and still, again, stronger than June of last year. And despite some concerns about a recession due to the last 2 quarters of negative GDP growth, the layoff rate, again, has stayed the same, and quits have largely stayed the same. And so I think overall, if I were the Fed, I'd feel pretty good about the situation. I feel pretty confident that the hike in interest rates has done a little bit towards cooling off, but the labor market is still really strong, and we're not hitting some of those recessionary concerns that people have been worried about.
Thank you, Layla. Bloody, final thoughts.
Economy is pretty healthy. We're not in a recession. If this is the definition of soft landing, Fed is doing a great job. So I'm pretty optimistic.
Yeah, Bloody. Layla, thank you so much for this live analysis. For more information about this analysis, you can visit us at lightcast.io for more information. We thank you for joining us. Please join us again on Friday for the employment situation jobs report for another live analysis with our top economists. Again, we appreciate you joining us for this live analysis, and we will see you soon.